Alright, so the first reading for financial reporting and analysis, inventory. The good news for you is that the reading is more or less similar to what we did at CFA Level 1, which means you already know many of the concepts. On top of that, it goes a little bit of deeper, so which gives us better perspective on how to read numbers and analyze them. So what I have tried to do is, since I have assumed that most of you know or remember at least some part of inventory from CFA Level 1, I have reverse constructed my presentation in the form of questions and answers. So I would be throwing a series of questions at you and then we will discuss each of those concepts. So the first question, if you have opening inventory, closing inventory, purchases, is it possible to determine COGS? So how do we do that? Opening plus purchases minus closing. So some of you would like to remember it using the flowchart we built at level 1. So if you remember, we started with opening inventory and then we said that opening inventory will increase by purchases. And the assumption that we made, we said that let the purchases happen in the first half of the year. So in the middle of the year, you are left with an inventory value of X. And then we said two things can happen. Either that inventory is sold, and if it is sold, it becomes COGS, or it remains in your closing stock. So that essentially gives us four values, 2 above X, 2 below X. So we can say opening inventory plus purchases should be equal to COGS plus closing stock. And given any three values, we should always be able to find out the fourth one. Is that okay? So let's do a couple of examples on this. Let us say opening inventory is 200. COGS 250. Purchases 100. What should be the closing inventory? So closing inventory now is 50. Again, just since it's the first question, we can build a flowchart here. Opening inventory plus purchases. So we get X and then COGS and closing. So you would put 200 here and you would put 100 here, which means your X should be 300. And then COGS is 250. And to make the equation tally, closing has to be 50. Let me add one more variable to this equation. Inventory write down in that particular year is 20. Find out the closing inventory. How much? 30. Your closing inventory is still 50. Because inventory write down was considered as a part of COGS. So now what happens is, on your flowchart, opening inventory is 200, your purchases are 100, so X is 300. Now we have a COGS of 250 and that COGS of 250 includes inventory write down value of 20 and therefore your closing is 50. Do you agree? No? So both US GAAP, IFRS, we discussed this at level 1, that COGS would be inventory write down would be considered as a part of your COGS. We do not show it as a separate item in P&L, we just club it into a part of COGS. And since we already have a COGS, that 20 would be considered as a part of 250. So we don't need to account for it separately. Are we good to go ahead? Next question. LIFO, FIFO, weighted average, specific identification. Where should we use specific identification? vintage cars or maybe jewelry. So where every item is unique. So you can specifically identify which item you have sold. Weighted average is generic. We can use it everywhere. How about LIFO? What type of instruments? What type of goods? Food products? Are you saying perishable products? Let us say we did a question on those movie rental or maybe CDs, right? The movie CDs that we sell. So what method is appropriate, LIFO or FIFO? The appropriate method is LIFO. Because when a customer comes to watch or when a customer comes to buy a CD for a movie, he would always prefer to buy which is the recent one. That means you're always selling the one which are recently acquired, and therefore your COGS should be in tune of what you're actually selling. So we use LIFO. But think of some non-perishable product, and you have a big pile of that product. In fact, pile may be LIFO yoga, but most of the other commodities you can use FIFO, first in first out. So where it doesn't really make a big difference. But if it's a perishable commodity, perishable के लिए क्या appropriate होगा? Seller के perspective से FIFO, but from a consumer perspective, it should be. Anyways, moving forward. Okay, so US GAAP, all, and IFRS, all except LIFO. So in case of FIFO, your COGS, should this be made of items first purchased or last purchased? COGS, items first purchased. Then closing inventory would be made of item last purchased. As an analyst, which method you think would reflect the true financial position of the company? How many of you think it is FIFO? Question पढ़ो और उसका जवाब दो. How many of you think it is LIFO? LIFO depends on whether it is inflation or deflation. FIFO. So are you saying FIFO in inflation? नहीं. Irrespective of inflation or deflation. FIFO. So again, the thought process should be like this. If you are using FIFO, then the first purchased are first out. That means what is left on the balance sheet? On balance sheet, if you are using FIFO method, let me make a chart here. Don't worry about inflation right now. Just let us think of FIFO. So your COGS is made of first purchase, and your balance sheet inventory is made of the latest purchases. And is this the current market value of the inventory? And therefore, irrespective of whether we are in inflationary environment or deflationary environment, a FIFO would always show you a correct financial position of the company. Correct? So if you are in inflationary environment, it will show inventory values higher. If you are in deflationary environment, it will show values lower, but it will always show the recent prices. When we are on LIFO, then your COGS is made of latest prices, and your balance sheet values is made of first purchases or old purchases. So now your COGS will reflect the correct financial performance. That means if you are analyzing a balance sheet, then as an analyst you would prefer to have a FIFO balance sheet. But if you are analyzing income statement, then as an analyst your preference would be for a LIFO income statement. Are we together on this? Do you want to write this part? Please write if you want to, but do it quickly. How many of you have received your results yesterday, day before yesterday वाले? इस बार लेवल 1 का रिजल्ट मिलके पास हुआ है ऐसे कौन है? अभी थोड़ा अच्छा लग रहा है आपको? लिखो. Done writing? Okay. So which method reflects true profitability? On the income statement, it should be LIFO. LIFO. So calculate COGS and ending inventory in all the methods. FIFO, LIFO, weighted average. Please do it quickly. So are we using periodic or perpetual? Are we using periodic or perpetual? You use either, it doesn't matter because sales का डेट दिया नहीं है. एंड अगर यूनिट्स सोल्ड अगर डेट दिया होता तो फिर अलग अलग वैल्यूज आते हैं. अग्री? सो अभी कोई भी यूज कर लो. Is it done? Do you want me to help you with the calculations? Good. Thank you. I take my thank you back. हाँ. क्या weighted average कैसे करना है? इन सब का टोटल कितना होगा? 38. और कितने यूनिट्स? 10. सो एक यूनिट का प्राइस 3.8. सो 7 बेचा है तो 7 इंटू 3.8 और जो भी बचा है इंटू 3.8. Your favorite question at level 1? LIFO COGS. So which method is more appropriate during inflationary period? So the answer is depends. Depends on what are you analyzing. If you are analyzing balance sheet, the answer is still FIFO. If you are analyzing income statement, the answer is still LIFO. Many people in the class, they just four. कोई ना तो लगे जाएगा. हाँ. How many of you think LIFO with a L? Yeah, that's the answer. So now what happens is last in first out is the cheapest inventory that goes into COGS. So जो पहले खरीदा था वो महंगा वाला है. So that remains in your closing balance. Will that be B? If prices are stable, then both LIFO and FIFO will produce you the same results. थोड़ा सोच के बोलना. We are in an inflationary environment. Can we say LIFO will always be less than FIFO ending inventory? Yes. Okay, so the answer to this question is yes. What is LIFO reserve? एक में 3-4 अलग अलग आंसर आ रहे हैं. पहला FIFO इन्वेंट्री. अर्पित ने आंसर दिया है FIFO माइनस LIFO इन्वेंट्री. सो अर्पित ने आंसर दिया तो बहुत सारे लोग यस. हाँ. और कोई आंसर है वर्जन इसका? LIFO रिजर्व. इज दैट द ओनली वे वी डू इट? Alright, so let's do an example on this, a comprehensive one. So on the left we build LIFO, on the right we build FIFO. Try to get the concept right because it's again a popular area for an inventory question. They will try to play around with this concept, which is relatively simple. Let us say you are starting a business, therefore no opening inventory, so you do purchases. The value of purchase in LIFO is 1000. FIFO में purchase का value कितना होगा? Should that be less than 1000 or more than 1000? The value of purchase would be same. Now we will reduce how much we have sold. So I am saying 500 here and I am saying 300 here. So once we reduce what we have sold, we are left with closing balances. So closing balance here is 500, closing balance here is 700. Now the difference of these two inventory is essentially your LIFO reserve. And LIFO reserve is how much? LIFO reserve is 200. Now can you also observe that it is also the difference in two COGS? So that difference in two COGS has actually also contributed to the difference of, or also contributed to the LIFO reserve. So are we together so far? Now let's go to year 2. This was your year 1. Now I'm going to year 2. Opening balance 500 here, 700 here, so this is 200. Now COGS, I am intentionally avoiding purchases just to keep things simple. So here COGS is 400, here COGS is 150. So now we will get the closing balance. Closing balance is 100, closing balance is 550. Now what is the closing value of LIFO reserve? 450. Now the most important point of this discussion, आपका LIFO reserve 200 से 450 increase हुआ है, and if you would see what is the difference in your LIFO COGS this time around, 250. So that 250 got added to this opening LIFO reserve of 200 and we got closing LIFO reserve of 450. So this relationship is going to give us multiple equations. The easiest way to think of this is, think of LIFO reserve as a balance sheet item जो हर साल increase होगा. And how will that increase? It will increase by the differences in two COGS. So every year LIFO COGS would be higher than FIFO COGS, assuming inflationary environment, and that difference in two COGS will keep on accruing or keep on added to the LIFO reserve, and LIFO reserve will keep on increasing. Are we together on this? So can I say that closing LIFO reserve is equal to opening LIFO reserve plus bracket open LIFO COGS minus FIFO COGS bracket close? Should I repeat again? ध्यान से सुनो. Closing LIFO reserve is equal to opening LIFO reserve. So read 450 and 200. 450 is equal to 200 plus bracket open LIFO COGS minus FIFO COGS for that year. Yes. मतलब opening आपका 200 था. If you add 250 to it, you would get 450. और 250 कहाँ से आ रहा है? 400 और 150 का difference. It is difference of 400 and 150. Is that fine? Please write down the example. Should we go ahead now? You want to ask something, Manish? So LIFO reserve is the difference between LIFO inventory and FIFO inventory. Firm using LIFO are required to disclose LIFO reserve in their footnotes. Right. So when we would do curriculum questions, they have actually given extract of actual balance sheets of many companies. So the sentence is like this: that firm during the year used LIFO valuation method and the value of inventory was XYZ amount. Had the firm used FIFO method, then valuation of the inventory would have been higher by this amount, and would have been higher by this amount is nothing but your LIFO reserve, which is the difference between two inventories. So can we say this? Is this equation not correct? Aditya? Is this correct or not correct? So it should be inverted. So you will say FIFO minus LIFO, or FIFO inventory is LIFO inventory plus LIFO reserve. Are you fine with these equations? Should we go ahead? How do we convert LIFO COGS to FIFO COGS? So LIFO COGS is equal to FIFO COGS plus increase in LIFO reserve. So in our example, if you get kitna tha FIFO COGS 150 and the reserve was 250, so 150 plus 250 would have given us 400. Chale aage. So what is the intuition? We have already seen this. Okay, see if you can do the question. So let's do the ending inventory first. Currently you are using LIFO. Your ending inventory is 700. You also have the current LIFO balance, which is 300. Now, which inventory should be higher? LIFO or FIFO? FIFO. So you can use a simple logic and say 700 plus 300 is equal to 1000. Just take the LIFO reserve, add that to the value of inventory. Is that fine? Next one is LIFO reserve. Now, क्या हुआ? LIFO, sorry. Next one is LIFO, sorry, FIFO COGS. So what is the LIFO COGS? 3000. And what is the amount by which LIFO reserve has increased? It has increased by 100. So minus 100, that will get us 2900. So 1000 and 2900 is your answer. Do you want to ask any questions here? नहीं समझ में आया? आगे चलना आगे. If the prices are rising, quantities are stable or increasing, LIFO reserve will increase or decrease. So again, the way you think of this, as long as LIFO COGS is more than FIFO COGS, your LIFO reserve will keep on increasing. Should I repeat the sentence? As long as LIFO COGS is more than FIFO COGS, LIFO reserve will keep on increasing. So it says that prices are rising and quantities are stable or increasing, then LIFO reserve will keep on increasing. Yes, one is that you are not making new purchases. If you are not making new purchases, then last and first out is actually the old quantity. Are you following this? Last in first out would become the old quantity. So that could be one reason. Or second reason would be that prices are falling. If prices are falling, then LIFO COGS will become lesser than FIFO COGS. So that's when the LIFO reserve will decline. First one, you are not buying new quantity. So the logic is that LIFO COGS is more than FIFO COGS because every year you keep on adding new inventory, and in inflationary environment new inventory is expensive. Therefore LIFO COGS is higher. But if you're not doing it, then the inventory base is same for both, and then we might end up in a scenario where LIFO COGS is not as high as or it used to be. So your LIFO reserve will stop increasing at a higher rate. Are you fine here? Yes. So next question, what is LIFO liquidation? So LIFO liquidation is simply when your LIFO reserve every year is decreasing. So LIFO liquidation occurs when LIFO firm's inventory quantities are declining, and now the older costs are included into COGS. It will result into temporary higher profit margin and higher amount of income taxes. And is the profit sustainable? No. So again, if you're finding this difficult to imagine, I can create a small hypothetical scenario. Let us say you are a citizen of this country, and on 1st of January you purchase goods 10. On 5th of January you purchase another units 10. This is quantity. On 15th of January you purchase another 10. Now these were purchased at a price of 20, these were purchased at a price of 200, and these were purchased at a price of 250. Okay. Now let us say between these you sold 5. So if you are using LIFO, the COGS would be calculated at what price? 20. Agree? Then between these you sold another 5. If you are using LIFO, COGS would be calculated at what price? 200. Following this? LIFO, last in first out. So if you are selling here, you would consider the most recent purchase. If you sold another 5, then the COGS would be calculated at 250. But what the firm can decide to do, imagine this central scenario. What if they simply do not buy here? Then when they sold at 5, that COGS would be calculated at 20. So that would result into some temporary increase in profit. But that increase in profit is not sustainable because you would wipe out your inventory which was purchased at a lower cost. Correct? Plus those profit would be artificially inflated in a way because those profits are not because you're selling better. Those profits are because you purchased earlier in an inflationary environment. Yes, no? Should we go ahead then? How many of you are getting 860 here? Okay, that's the answer. Now see how you think of this. We are using LIFO. Total quantity is 440. So technically we are going to assume that we have sold these. Now had we produced this quantity this year, the cost would have been 14. But we did not produce. So we are just using our old inventory. And because we are using our old inventory, our cost is lower. We are in an inflationary environment. So instead of 14, we have 13. So that's a benefit of 1. That's a benefit of 2. That's a benefit of 3. So this is simply 140 into 3. This is 140 into 2, 160 into 1. And then just add them up, which is 860. And that's an artificial increase in profit. But that profit will continue till when? Till the time that inventory is exhausted. Once the inventory is gone, then of course your profitability will shrink drastically because you would start producing at the current prices. Valuation method IFRS. Cost versus NRV. And US GAAP. So let's make this flowchart together. Valuation method. Okay, at level 2 we have really large list of differences between IFRS and US GAAP. And same as level 1, we have a video which is IFRS versus US GAAP. So I would recommend you start watching that video and try to go through it 5-6 times so that you would be able to remember all the differences. So on the left, I am building flowchart for IFRS. On the right, we are doing it for US GAAP. IFRS is relatively simple. We compare cost versus net realizable value. And how do we get net realizable value? Selling price minus selling cost. In case of US GAAP, we will compare cost versus replacement. And to this replacement there was one more word. Replacement is same as, also called as market value. Now we put a condition on this market value. We said that this market value has to be in a logical price band. So there was an upper band and there was a lower band. So let us say this is the lower band, this is the upper band here. So the upper band was net realizable value and the lower band NRV minus normal profit margin. Now how did we get this NRV? So this was again selling price minus selling cost, selling price minus selling cost minus normal profit margin. Do you want me to read out anything out of this, Sumit? बना लिया? चलना आगे? By the way, when we said cost versus NRV, we meant whichever is lower. Cost versus NRV, whichever is lower. Cost versus replacement, whichever is lower. IFRS. So let's do IFRS here. So IFRS is straightforward. We just compare cost versus net realizable value. Cost is 210, net realizable value is 203. We choose the one which is lower. In case of US GAAP, cost versus what is the replacement value, which is 197. But we put a logical check onto it. So on the higher side it has to be less than 203. On the lower side it should not be less than 203 minus 12, which is 191. So is 197 between this? Yes, so we can use it and then we will show it at 197. Are we good to go ahead? Okay. What would be the impact of LIFO on COGS? Assume inflation. COGS would be higher. Taxes, net income, inventory balance, working capital. Working capital. So In working capital, it is affecting which variables? Is it affecting inventory? Yes. Anything else? Is it affecting any other variable of your working capital? It is affecting cash. So when you are using LIFO, what will happen to inventory? Inventory would be lower. But what will happen to your cash? Cash will be higher. Why would cash be higher? Because you use LIFO, your profits were lower. Because your profits were lower, you paid lesser taxes. And because you paid lesser taxes, your cash balance was higher. So then, is that not an opposite effect? Inventory is decreasing, cash is increasing. So what would be the impact on working capital? Cannot say? Cannot say? My question to you is, what would be the impact on working capital if you are using LIFO compared to a firm using FIFO? Will the working capital be lower, or will that be higher, or cannot say? Correct. The inventory would be a dominant effect, cash would be a less dominant effect. Assume a tax rate of 30%. If difference of COGS is of 100, then the cash benefit would be of 30. समझ में आ रहा है मैं क्यों कह रहा हूँ? Are you following why this is happening? That difference in inventory is essentially a function of difference of COGS. Correct? And if difference of COGS is of 100, then the tax savings in the form of cash would only be 30. So your cash will increase, but if your inventory went down by 100, cash will increase only by 30. And therefore net effect, your working capital will go down. How about cash flows? So what would be the impact on CFO? CFO is cash flow from operations. Very nice. So what would be impact on CFO? CFO would be higher. COGS in a way is a non-cash expense. When you charge COGS, do you pay cash? The purchase of inventory is a cash expenditure. COGS is what you already have with your books. So COGS doesn't matter, but what matters is the cash in the form of taxes. And because you're paying less taxes, your CFO would be higher. How about CFI? CFI, no impact. How about CFF? No impact. So your CFO would be higher. How about current ratio? Current ratio would be lesser. Why? Because your inventory was lesser. How about inventory turnover? Inventory turnover. Formula क्या है? Credit purchase. Credit purchase divided by average inventory. क्या सुनाई नहीं दे रहा? COGS. So COGS divided by average inventory. हाँ तो क्या होगा? COGS is increasing, average inventory is decreasing, so ratio would be higher. इसलिए कभी कभी एग्जाम में ऐसे सेंटेंस आता है that a firm using LIFO might look less profitable but it would be more efficient. A firm using LIFO might look less profitable but it would be more efficient. Do you agree? Yes, because your total profits would be lesser but your inventory turnover ratio would be higher and it is a efficiency ratio. Therefore, it would be more efficient. How about debt to equity? Any impact on debt to equity? So, because you have less profits, you will have less equity. And because you have lesser denominator, your ratio will go up. Any of these ratios should I repeat again? Current ratio. It is current assets divided by current liability. Current assets include inventory. Inventory would be lesser. Same point. So cash would be higher, but the impact of cash would be lesser than the impact of inventory. Same, just in our example, inventory was 100, but cash benefit was only 30. Yes, any of these ratios? More efficient. So we can see that here. Can you see that your net income is less? So is it less profitable? Can you see that your inventory turnover is higher? So it's more efficient. That's it. CFO. So basically one of the important component of cash in CFO is taxes. And when you're using LIFO, you will pay less taxes. And because you will pay less taxes, your CFO would be higher. He's saying my PAT is also lower because of COGS. बोलो कुछ यार. Basically, the argument, the point of discussion is that I am saying that CFO would be higher because we will pay less taxes. But then Vallabh replied that PAT would be lower because COGS is higher. So if the PAT is lower, automatically CFO should be lower. तो आप बोलो कैसे क्यों नहीं है, ये मैं एक्सपेक्ट कर रहा हूँ. Okay, it works like this. देखो थोड़ा टाइम लगेगा. We will build a comprehensive example so you will understand what I'm saying here. Opening inventory 100. Closing inventory 70. COGS 80. Sales 200 minus COGS, that is your gross profit, minus COGS, that is 80. So we will have gross profit of 120 minus SGA, let us say 50, minus depreciation, let's say 20. So we are left with EBIT of 50. I'm assuming no interest. I'm bored of making the format, so I'm just saying taxes 25. So profit after tax 25. Let us build the cash flow statement. Now my assumption here is it is a LIFO form. Okay, my assumption here is it is a LIFO form. Let us build the cash flow statement using कौन से मेथड से करना है पहले? Indirect से करता है. So let's start with indirect. ठीक है? So your starting point is PAT. So your PAT is how much? 25. Now to this PAT we would make adjustment of depreciation. So depreciation is 20. So we are left with 45. Then working capital adjustment. So opening inventory was 100, closing inventory is 70. Current assets have decreased. Current assets have decreased. Add or less? So add decrease in inventory, which is 30. So we will have cash flow from operations which is 75. Is it fine? अब इसको डायरेक्ट तरीके से सोचो. डायरेक्ट तरीके से सेल्स आया हमारे पास 200 का. COGS में पैसा गया? Did we pay in COGS? No. Do we pay in COGS? No. We pay in purchases. है ना? So अभी इस डेटा से हमको परचेस कैलकुलेट करना है. योर परचेस इज ऑफ 50. डू यू अग्री? इन्वेंट्री अपने परचेस किया 50 का. फिर आपका SGA का खर्चा 50, टैक्स का खर्चा 25. हाउ मच कैश फ्लो? 74. ठीक है. नाउ the main point of discussion, please observe now. Now I'm going to assume that we are on FIFO. I'm changing the color so that it becomes clearly visible. The only thing that changes in FIFO is now your COGS, let us say, becomes 50. And if your COGS becomes 50, then your closing inventory should also change, है ना, क्योंकि हमको बाकी सब तो डेटा सेम रखना है. सो ओपनिंग इन्वेंट्री 100 था, आपने परचेस किया 50 का, ठीक है. सो टोटल 150, उसमें से आपने 50 खर्च कर दिया. सो क्लोजिंग इन्वेंट्री वुड बी, क्लोजिंग इन्वेंट्री इज 100, ठीक है. एवरीथिंग एल्स रिमेन्स सेम. अब क्या होगा आपके इनकम स्टेटमेंट में, यहां पे 200, COGS कितना होगा 50, सो दिस इज 150. SGA 50, this is 20, so we are left with 80. 80 पे टैक्स हमको देना पड़ेगा 40, प्रॉफिट आफ्टर टैक्स 40, ठीक है. नाउ लेट अस बिल्ड द कैश फ्लो स्टेटमेंट यूजिंग द इनडायरेक्ट मेथड. We start with a higher PAT 40, then we say plus depreciation कितना है 20, plus or minus we will have to make adjustment to the inventory. So आपका opening inventory 100, closing inventory 100, inventory का adjustment 0, तो आपका CFO कितना आया 60. अब डायरेक्ट में देखो, सेल्स 200. Is your purchase same? Yes. Is your SGA same? Yes. The only thing that changes is taxes. And now you're paying taxes of 40. So your CFO of 60. Okay, in case if you forgot what we were discussing, I was trying to prove that a LIFO COGS, a LIFO method will result into higher cash flow from operations. And that profit is essentially an inverse function. So you should never think of cash flows from indirect method. You should always think of cash flows from direct method. That makes decision making easier. Please write down the example. Indirect method is an accountant's fancy. Indirect method is an accountant fancy. What he's trying to do is, he's starting with profit, he's trying to come to CFO. But in a true sense, cash flow is what direct method is. How much you receive, how much goes up. So if you'll observe the one in red and one in blue, everything is same except the taxes, right? Therefore, the correct statement we use, that when you are using LIFO COGS, it results into lower profit, and lower profit doesn't really mean anything, but because of lower profit, it results into lower taxes, and because we pay lower taxes, we have higher cash flow from operations. So if you think from the perspective of direct, decision making becomes very easier. And so what is happening is, LIFO and FIFO is just accounting method. Nothing really changes. The only thing that changes is the amount of tax that you pay in cash. So what conclusions would you draw about future performance of a company if stock of raw material and work in progress has increased? If you see a company loading up a lot of raw material, then how do you read that? Maybe it is expecting higher sales in future. But if you see that the quantity of finished goods on the balance sheet is increasing period after period, then company is not able to exit or sell that inventory. So this would be taken as a positive indication, but this would be taken as a negative indication. So if you have to adjust, are you still taking this in? Now this is the new part at level 2 compared to level 1, and it's difficult. So if you focus, you would get this right. Otherwise, when you read back home, you are going to struggle with this area. So we have to adjust LIFO firm's financial statement to reflect FIFO cost. So we have to change balance sheet, we have to change income statement. What adjustment should we make to following items? So please remember, we are shifting from LIFO to FIFO. So number 1, what adjustments do we make to current assets? We will increase what? We will increase inventory. Because you are shifting to FIFO, so amount of inventory should increase. What should be the increase of amount of inventory? It should be equivalent to what is the amount of LIFO reserve that we have. Will there be any other item? Will there be any other item? Yes. We will have to make an adjustment to cash. And now your cash will decrease. By what amount your cash will decrease? So your cash will decrease by the amount of LIFO reserve accumulated on the balance sheet multiplied by average tax rate. I am not saying marginal, I am saying average, because imagine cash is a cumulative item. So maybe your tax rate were changing in the past. So then you will have to find out the difference of reserve in those years multiplied by the tax rate. And this calculation has to be done for respective years. What we are discussing here is how do we convert the financial statements of firm using LIFO to reflect FIFO. Now why would we do that? So imagine you are analyzing some company listed in US and you want to compare that with the IFRS company. Then the financials would not be comparable because maybe the company listed in US is using LIFO. So what we would do is, we would try to convert the LIFO financial statements to FIFO and then see how the balance sheet will look, how the income statement will look. Now we have to make adjustment to many items. So the first one is current asset. Now see if you can imagine this with me. Current asset, one component that would be affected is inventory. So every year the LIFO inventory was lesser than FIFO inventory, and every year the reason why it was lesser because LIFO COGS was higher than FIFO COGS. Correct? So what you can simply do is you can take LIFO inventory, you can add LIFO reserve, and you directly have the inventory value on the balance sheet. That should precisely be the value of FIFO inventory. But then because every year LIFO COGS was higher, every year we were paying less taxes in LIFO, and therefore every year our cash was higher. So when you convert to FIFO, there would be some tax adjustment and that would be negative. But cumulative difference of these two profits is actually cumulative difference of COGS, which is nothing but LIFO reserve. So to this LIFO reserve we will multiply with tax rate. But imagine your LIFO reserve right now is 350. It is made of two parts, 250 in year 1, 250 in 150 in year 2. What if in year 1 tax rate was 30% and what if the current tax rate is 40%? Then that cash difference, which was originally the function of taxability, which was a function of profitability, which was a function of COGS, would actually be calculated using these two rates separately. So we would not say 350 into the current tax rate. If we say 350 into 40%, that would be wrong. That would not be the true difference in cash. The true difference in cash would be this 60, this 90 and 150. Is that correct? No, this would again be 60. And then we would say we should reduce 120 from the cash. और एक बार repeat करो. Yes, no. So this is the LIFO form. This is the FIFO form. Purchases 1000. COGS 500, 400. Closing inventory 600, 400. LIFO reserve 500, 400. Yeah, I'm already thinking on my dinner plans. So this is 600. So this difference is 100. Now next year opening 500, 600. Now COGS 300 and 250. So now closing would be 200 and 350. Now your reserve is 150. Now why do we have this reserve of 150? Because first year the difference in COGS was 100. The next year difference in COGS was 50. So that 150 is making up your current 150. Yes or no? Yes. So that 100 of the first year plus 50 of the second year is making up current 150. So what conclusions can we draw from this? In the first year, LIFO profit was lesser by 100. Agree? Yeah. Second year, LIFO profit was lesser by 50, and profit was lesser because we have difference in COGS. Now if tax rate here is 50%, then what is your tax saving? Tax saving is 50. And if tax rate in the second year changed and now it is 40%, then what is the true tax saving in second year? Tax saving is 20. So in the combined 2 years, what is the amount of cash that we have saved in LIFO? We have saved 50 plus 20, 70. Now if LIFO we have saved cash of 70, and if you decide to convert yourself to FIFO, then whatever cash you have, that cash minus 70 would be the correct estimate. FIFO cash minus 70. Yes. But how did we take FIFO cash minus 70? We took that individually. Had we taken a blanket amount, for example, had we taken this 150 here directly, which is current LIFO reserve, I am writing that here in this corner. Had we taken that 150 and had we multiplied that with 40, then the answer it would have given us is 60. But we know that this 60 is wrong. The correct answer is 70. And this is happening because the tax rate has changed. But had the tax rate been same, imagine tax rate in year 1 was also 40. Then tax saving in year 1 would be 40. Tax saving in year 2 60. Then it would get us the right answer. But if the tax rates are changing every year, then respective tax rate and respective composition of that LIFO reserve. Is that fine? Should we go ahead now? You want to write this example? Don't write this anyways. Doesn't make any sense. Don't write this. You can watch the video later on. Next one. So this we have done. How do we adjust shareholders' equity? So you are shifting from LIFO to FIFO. थोड़ा तकलीफ दो अपने आप को. Try to think how will you adjust shareholders' equity. So can I say that LIFO equity should be higher and FIFO equity should be higher and LIFO equity is lesser. So you start with LIFO equity and to that you should add whatever the amounts by which profits must have changed. But which are those amounts? So that amount must be the cumulative difference in LIFO COGS and FIFO COGS. That is the amount by which profits must have been different. Cumulative difference of LIFO COGS and FIFO COGS. And that cumulative difference of LIFO COGS and FIFO COGS is nothing but LIFO reserve. Yes. So can I say it is the LIFO reserve by which amount of profits would be different? But these are profits before taxes. Yes. Right? In FIFO we also paid taxes. So technically the net adjustment should be LIFO reserve into 1 minus T. But again the same question, that had the tax rate changed, then we'll have to take year-wise calculation. But if the tax rate is same, we can do a blanket calculation. So just to throw a formula to you, that we can find out FIFO equity by saying LIFO equity plus LIFO reserve adjusted for taxes. Yes, no? Yes. आगे चलना है? Why reserve into? Because reserve will change your COGS. but that change in COGS, you will have to pay some taxes as well. So if your COGS is lesser, profit is higher, but you end up paying higher taxes. So the net difference, LIFO into reserve into 1 minus T. Moving forward. How do we adjust COGS? So you take LIFO reserve minus increase in LIFO. Sorry, you take LIFO COGS and then you say minus increase in LIFO reserve. Do we do anything for taxes? Do we do anything for taxes? No, यहाँ पे जरूरत नहीं है. How do you adjust current net income? So current net income would be the amount by which your LIFO reserve has increased into 1 minus T. That is the adjustment, and your profit should increase now. So you take the difference of LIFO reserve, that is essentially the difference of COGS. You adjust that for 1 into T and you would get the final differences of net profit.